Good afternoon. My name is Stephen Nolan. I'm the Managing Director of the UN-convened Financial Centres for Sustainability, and it's my honour to be chairing Ireland's 4th Climate Finance Week, which takes place this week. I'm really excited about this session. It's all about biodiversity, specifically greening finance and financing green, how asset managers are addressing the biodiversity crisis. We've got a phenomenal panel, which I'll introduce in a moment. I think 2 of our panel members are on the East Coast in the States, and the other 2 are in London. And Elena, I didn't recall, you just moved to London from Kuala Lumpur, so there's a truly international panel happening here with us today. As I said, we've got Elena, we've got Praj, we've got Adam, and we have Erin. And I'm going to just take a moment, if I may, and just start maybe first with you, Erin. Would you mind taking a minute to introduce us to yourself, who you're with, and what you focus on, please?
Sure. Hi. Thanks for having me. My name is Erin Leonard, and I'm the head of sustainability for HSBC Asset Management. I have an East Coast accent, but I'm actually in London, so don't confuse me with my colleagues on the East Coast. And we're focused on all areas of sustainability, but particularly around natural capital. So I'm looking forward to talking about that today.
Great. Thank you very much. And thank you for joining us, Erin, from London. Praj, maybe I'm going to jump across the water and go to DC, where I think you're currently based. Praj, can you introduce yourself, please?
Sure, thanks, Stephen. So my name is Prajul Baral. You can call me Praj. So I'm Senior Advisor at UN-convened Sustainable Insurance Forum, where I have been recently focusing on work around nature-related risk, particularly for the insurance sector. But I know today we are talking about the broader asset management and asset owner space. So really looking forward to discussing some of this stuff there. Thanks.
Super. Thank you, Praj. Adam, if I can jump to you, I'm unsure. Is it New York? Is it New York? Yeah, please, Adam, to you.
Yeah, thanks so much. I'm Adam Kanzer. I'm head of stewardship for the Americas at BNP Paribas Asset Management, and I'm based in New York, actually Brooklyn. My work covers all sustainability and corporate governance issues, but we're really particularly focused on biodiversity these days. We just published our roadmap for addressing biodiversity loss in May, and really looking forward to talking about it. Thanks for having us.
Adam, delighted you could join us. And finally, Elena, can I go to you, please?
Sure. Hello, everyone. Good day. I'm Elena Almeida, Policy Analyst for Biodiversity and Central Banking at the LSE Grantham Institute. In this role, I work with the NGFS Inspire Study Group on biodiversity and financial stability. And we have just published our report on biodiversity and financial stability risks last Friday. So I'm excited to be able to speak to it finally after 3 months of hard work.
Fantastic, Elena, and I read it over the weekend, and it's a great, snappy, punchy read, so congratulations. And in those 3 months, you were also, as I said, moving from Kuala Lumpur to London, so a lot has been happening for you. I'm absolutely thrilled with the support of my colleague Paddy, what the sort of panel we've pulled together today. We've got 2 leaders from industry, and from leaders of significant companies in BNP Paribas and HSBC, which is super. And then on the flip side, on the regulatory side, and recognising that neither Praj or Elena are regulators, but they're both involved in regulatory bodies. Elena with the Network for Green in the Financial System, which is, I think, 70 plus central bankers. And then Praj with the Sustainable Insurance Forum, which is just 32, 33 insurance supervisors. So we got a great insight to what these sectors are thinking. Elena, we just have just under an hour today. But given that your report is just hot off the press, I thought it'd be a good way to actually start with you, maybe a short presentation about just some of the findings, because that will really set us up. I hope Erin, Adam, and Praj, you agree, will set us up nicely to get into our discussion. So Elena, if you don't mind kicking off, please.
Sure. Can I have my presentation? Great. Okay. So let's jump right in. Biodiversity is declining at an unprecedented rate in human history. With everything that's going on in the world and the topic of climate change just now being widely accepted by and the focus of financial sector participants, we kind of overlook the issue of biodiversity loss. But we are slowly beginning to understand that biodiversity loss can lead to severe economic and financial implications. The Dasgupta review published earlier this year made clear that we have collectively failed to engage with nature sustainably, so much so that our demands far exceed nature's capacity to provide us with the goods and services we and our economies need. For example, in 2021, Earth Overshoot Day fell on July 29th. This is a date that we've exhausted nature's budget for the year. For the rest of the year, we are going to be operating at a deficit, and at the rate that we are consuming, we need 1.7 Earths to sustain us. A recent World Bank report highlighted that we cannot afford to the collapse of ecosystem services. Such a collapse would cost 2.3% of global GDP annually by 2030, and some of the poorest countries would be hit the hardest. Healthy and natural ecosystems are tightly interconnected with climate security in terms of carbon management, resilience to physical shocks, and the provision of vital services for human well-being. We cannot separate between biodiversity and climate. These things are inextricably linked. And so when we think and act on greening the financial system, we must take an integrated approach to both climate and biodiversity, risks and opportunities to deliver long-term sustainable development. And this really is the reason that the NGFS Inspire Study Group was established. Our aim is to develop a research-based approach to how central banks and supervisors can fulfill their mandates in the context of biodiversity loss. This study group comprises 21 NGFS members and observers along with 23 research institutions and is co-chaired by Dr. Mar Jun from the NGFS and key advisor to the People's Bank of China, and Nick Robbins, my colleague at LSE and Inspire. Our outputs are 3 reports that is published on this topic of biodiversity and financial stability. So the first was a vision paper that was published in June 2021. The second is our interim report, which was published just last Friday. And the third is a final report, which will be published in March 2022. So I've already outlined how biodiversity loss is declining rapidly. So let's move on. Okay. Left unchecked, biodiversity loss could affect financial stability via physical risks. That is physical assets financial institutions are impacted by biodiversity loss. For example, the decline of animal pollinators like bees can affect crop yields. And this is something that the DNB had found in their study that was published last year. And biodiversity loss could also affect financial stability via transition risks, which arise when the value of financial institution assets diminish as a result of national or international policy changes toward a nature-positive economy. For example, policies to increase protected areas could affect firms' ability to extract natural resources or affect their ability to pollute the air or water freely without regard of the environmental costs. So we know that central banks and supervisors are starting to take action. For example, I said that the DNB of the Netherlands was the first central bank to evaluate the exposure of financial institutions to risks related to biodiversity loss, and now others are conducting similar studies. For example, in France, the Banque de France also concluded that biodiversity loss would have significant impacts on their financial system to about 42% of the value of securities held by French institutions comes from issuers that are highly or very highly dependent on one or more ecosystem services. And that was just a study that was published last month. In Malaysia, the Central Bank of Malaysia explicitly links climate and biodiversity in its recently published climate change taxonomy. And in Brazil, the Central Bank of Brazil has included biodiversity in recent consultations on ESG risks and rural credit. So there is already action, and we expect a lot more now that the NGFS is very engaged on this topic. So more to come. These are just a few examples. And then looking ahead, we know that the UN Convention on Biodiversity is coming up now and will be continuing next year, and this will have a severe implication on the international policy context and how that would have implications on transition risks. And then in terms of the financial sector, I'm sure you'll hear from the other panelists that there is a growing focus on risk and impact assessments, disclosure, and nature-positive finance. And with regards to the next steps for our Inspire and GFS study group, we will be publishing our next report in March 2022 to build on the first 2 reports. And I think that's it.
Thank you very much, Elena. I'm just kind of sitting there, I'm staggered by the figures you had for the French and the Dutch exposure of financial services firms. I think the Dutch was over $500 billion alone. Praj, let's stay with the supervised regulatory space if I can, and let's just jump in and scare us some more, Praj. So where are we from an insurance supervisor perspective? We know the central banks are looking at this. Elena's just issued a report. Your report will drop in a few weeks, so there's probably limited what you can say, but where are we right now, Praj, from that perspective, please?
Sure, happy to walk you through. Let us pause for a moment and spend maybe a minute and a half on what is happening with the broader global policy response in response to nature-related risk, right? Because that is really important before connecting that back to the supervisory and regulatory side. In June 2021, the G7 leaders agreed to a historic nature compact, which supports new global targets to protect and conserve at least 30% of global land and at least 30% of global ocean by 2030. And in the same vein, in July 2021, the G20 environment ministers committed to continue and increase their efforts to address the interconnected challenges of nature-related risk and climate change. The ministers also welcomed the additional impetus towards achieving the vision of living in harmony with nature by 2050, provided by the decade on ecosystem restoration. The ministers also recognized the importance of work on nature-related financial disclosure and took note with interest of the establishment of TNFD. So you will see that on a global level, policy-wise, a lot is happening. And in the last few years, insurance supervisors and regulators have developed and adapted frameworks and processes to supervise climate risk. And more recently, we are seeing that supervisory attention is being paid to broader nature-related risk, right? And the mandate of a supervisor is typically related to, key objectives of financial stability and market conduct. And a supervisor response to nature-related risk can therefore begin with, for example, an assessment of relevance of nature-related risk to these objectives. And Elena have already highlighted a few central banks and supervisors that have taken action on some of the tangential issues, right? And we have a couple of examples that we gathered in our recent insurance specific study. And, DNB is again a good example where the DNB assessment recommended that supervisory authorities must ensure, for example, through good practices, that financial institutions report in such a way that produce a clear picture of the risk profile and resilience as it relates to nature loss. So it specifically mentions nature loss. The similar thing in Australian Security Exchange Corporate Governance Council, in its fourth edition of the Corporate Governance Principles and Recommendations, recommended that a listed entity, and now we're talking about asset managers and owners as well, should disclose whether it has any material exposure to environmental or social risk, and if it does, how it manages and intends to manage those risks. And we are seeing these repeated examples. In Germany, for example, BaFin has issued a similar guidance notice. There is a guidance notice from Monetary Authority of Singapore with the Central Bank of Singapore. So we are seeing a lot of movement in the regulatory side, but very slow, of course, because most of the attention so far has been given to climate risk. And like Elena said, the recently published occasional paper, by Inspire and the NGFS, has also identified the need for a strategic and a structured approach by central banks and supervisors to address the challenge of nature loss. The NGFS also recommended that supervisors take adequate qualitative and quantitative measures to address environmental risks, which obviously includes a lot of biodiversity and nature-related risks that we're going to cover today. So, Stephen, I think we are seeing pretty solid movement in this space. Of course, like this issue is new to the supervisors and regulators, so they are taking, I think, time to understand this risk and also see what their fellow financial institutions are doing, because sometimes it also happens that there's a proactive market approach. And so I really look forward to hearing from other panelists in today's panel what's happening broadly in the market as well. Over to you, Steve.
Great, thank you very much for that, Praj. So, building on both what yourself and Elena said, solid movement. We've seen examples, the Dutch, the French, Germans, Singapore and elsewhere. A lot happening, guidance, note. Sometimes I feel like a bit of an amateur therapist with industry players in that I'm dealing with them right now on climate issues. And what does this mean for my firm, and how do I integrate X, Y, and Z into products and services, or how do I develop new products and services, or where do I find the data, or I can't find the staff, or there's too many initiatives for the private sector right now, okay? digital is a great opportunity, but I don't know how to get my head around it. But now the calls in recent months have been biodiversity. Wow, I haven't got my head around climate yet. And we're dealing with that tsunami from the European Commission on sustainable finance directives. But I think, Elaine, as you said, and it's really important, and Praj, you echoed it, you cannot separate out climate and biodiversity. They're two sides of the same coin. But at the end of the day, maybe, Aaron, I can come to you first, because you're at the coalface in your role. Wow, there's a lot going on right now. And how are you unpacking that as a firm, please, Aaron?
Oh, gosh. Well, you're absolutely right. And I think one of the challenges for any financial market participant right now is to try to figure out where to focus and where you can make the biggest impact. But maybe to take the conversation a little bit further, if you don't mind, I'd love to talk for a few minutes about the opportunities associated with investing in biodiversity. Because I think our industry, it's very clear that we've got an important role to play in directing the flow of funds to projects and companies that are built on nature positive business models and away from those that generate these nature negative outcomes that we're also concerned about. The asset management industry and our providers are critical links in the transmission channel between ecological, economic, and financial systems. And it's probably worth reflecting for a moment on the intrinsic value in our shared natural world. And I always like to think a little bit of a historical perspective. So if you think about it, 100 years ago, nature was recognized as one of the three means of production alongside capital and labor. And of course, if you think back to the legendary wealth of historic landowners, it's obvious that how to recapture a sense of the value that our land and ocean-based resources intrinsically hold. And of course, today, more than half of the world's economic output depends on nature. So that's around $44 trillion worth. And it's, as we've been talking about already, it's a key defense against climate change. We know that simply reducing fossil fuel emissions won't be enough to meet the 2050 Paris targets. So the great news is that through conversations like today, the value of biodiversity in nature is just beginning to be re-recognized, and the financial industry is coming together to put nature back on the table as an asset class, which is something that I think hasn't been the case probably over the last 50 years. But maybe let me just very quickly try to give a sense of these investment opportunities, because there are really exciting investment opportunities out there. And I can do that by giving an overview of the asset class, or a quick run through of the asset class.
Please.
Sustainable agriculture involves farming in ways that meet society's need for food and textiles without compromising the ecosystem. Sustainable forestry invests in timberland projects with embedded nature conservation and also generates carbon credits. And a third sector is the catch-all, which we call ecosystem services, and that includes businesses and projects around ecotourism, aquaculture, and coastal restoration. So these projects typically provide multiple sources of return, and we think of these as a stacked return profile. So taking sustainable forestry, for example, and thinking about the revenue streams, you can get revenues from higher margin timber sales as demand increases for sustainable packaging, land value appreciation as the yield is reassessed, generation of carbon credits, conservation fees, biodiversity services like ecotourism. So there's a lot out there today that are restorative projects that are profitable. And there's huge upside here if we see appropriate pricing for carbon, biodiversity, and water, and appropriate fines and taxes for excessive pollution and inefficient resource consumption. So investors who move into this asset class early, when biodiversity is afforded no value, stand to see significant upside potential. And I think it's important, though. I mean, it's important to recognize that there is profit potential in this asset class, but of course, that's only part of the objective here.
Yep.
And the projects that we're looking at also have really meaningful, positive ecological impact opportunities associated with nature-based investing. So one
Erin,
that I like to,
Erin,
sure.
can I just stop you there? Because I want to come back on the opportunities in a moment, because actually I'm really excited
Yeah.
about that, because this is why we're all here,
Okay.
right? But I just want to just bring Adam in as well, if I may, Adam. I'm looking there, I'm just hearing what Erin said, you know, the value in nature and biodiversity. Erin, that blew me away. I completely forgot about that. Nature, capital and labour were seen as a kind of the three main outputs 100 years ago. Isn't that amazing when you think about it, just how much we kind of lost sight of that? And then, as you said, you know, the stark figures, 44 trillion of the world's economic output depends on nature. So that's just incredibly stark when I think about that. So I'm going to just hit pause on the opportunities, because I want to get into them in a moment and unpack them. Adam, if I may, you know, and I'm going to go to Praj and Elena in a moment, talk about disclosures and you know, and then get you guys comment to that. Adam, I want to come in on a boring topic. Well, it's not a boring topic, but an important topic: risk, right? Because with Elena, with Erin, we jump straight into the opportunities, and I feel what we're seeing. We had another session a few minutes ago, and it was about the taxonomies and what we're seeing coming out of the Commission and how we're managing risk. And we are, as Erin said, now flipping to opportunities. But when we look at risks, what risks does biodiversity loss present to a global asset manager like BNP Paribas Asset Management, please? Can you give us a little bit of sense of that and what you guys are doing in the firm to deal with that?
Yeah, sure. And thanks so much for inviting me to participate here. And also thank you for highlighting biodiversity, you know, in the lead up to Glasgow. It's so important, and I think, as every speaker has said already, it's so important to connect the climate crisis to the biodiversity crisis. We can't solve one without the other. They're driving each other. And I think that is really new information for most investors. And I'm including, you know, even those investors that have been really dedicated to working on climate change for a long time. It's really important to understand that there's a variety of pathways to get to 1.5 degrees, but we're not going to get there without nature. And there are some pathways that, you know, rely on carbon capture down the road that are not going to come in time to save critical ecosystems. The World Economic Forum estimates that half of global GDP is threatened. Nature-positive pathways could provide $10 trillion in new opportunities, 395 million jobs. You know, big numbers, right? I consider all of that to be an understatement. It's big enough to warrant action, but the real risk here, what we're really talking about here, is a breakdown in our planet's life support systems. Ultimately, threats to stock price and financial stability kind of, you know, really ultimately may be the least of our worries. I also think it's important to understand, you know, as each new crisis comes, each one teaches us something new about risk. They only seem to get more complex and more severe. So I'm not even really sure that we have the right vocabulary to talk about this kind of crisis. Risk is something that is, you know, a potential event that may happen in the future. Biodiversity loss, like climate change, is not a risk per se. It's an ongoing process driven by human activity, proceeding according to natural laws, not the laws of economics. So a response that's solely informed by economics won't fix the problem. We need to be guided by science. So what are we doing about this? Let me kind of take a step back a little bit and talk a little bit about our plan. As I said, we published our roadmap for addressing biodiversity loss back in May, roughly 40-page report on our website. In line with our global sustainability strategy, our biodiversity roadmap reflects all 6 pillars of how we approach sustainability. And so very quickly, we're going to be looking to further incorporate biodiversity into ESG integration, which we do globally. We're going to be expanding the incorporation of biodiversity in our corporate engagements and our public policy work, which I'll talk a little bit more about in a minute. We're going to continue to assess biodiversity issues in approach to responsible business conduct. So, essentially, where do we draw the lines in terms of when do we exclude companies from our portfolios? And we're going to work to increase the understanding of biodiversity issues in the investment community more generally. We are providing clients with a range of solutions targeted at solving biodiversity challenges. We're launching new products focused on biodiversity. And of course, we're managing the biodiversity impacts of our own operations. In terms of stewardship, And here's the area where we can really express a clear point of view as investors and use our influence. Because when we walk into these engagements, we're not looking simply to understand how a company is prepared to protect itself against nature loss. We're focused on changing corporate practice. So we have a commitment to engage with the highest impact industries to reduce their impact on biodiversity. We're currently working on a range of issues from sustainable seafood to systemic pesticides to deforestation, which is an area that we've worked on for a number of years. We're working on to develop a collaborative investor engagement focused on biodiversity. And this is so important because we've had many effective collaborative investor engagements over the years that touch on biodiversity, but none of them are focused on biodiversity. Somehow, I think somebody else said this before, somehow biodiversity has slipped through the cracks, which is amazing for something that's so large and complex. So we're working with a group of investors to build an investor engagement focused on biodiversity, which will really be centered around a set of investor expectations for corporates, going from board oversight through to policy setting, to capital expenditures, to lobbying. And hopefully to get companies to prepare for the TNFD, which is coming. We hope to announce something soon on that. In terms of our proxy voting, we over the past couple of years, we've been supporting shareholder proposals focused on deforestation and climate at more than 90% rate globally. We will consider submitting our own shareholder proposals on biodiversity. And on public policy, we just recently signed an investor statement in the lead up to COP15. 78 financial institutions managing more than $10 trillion called for a really ambitious outcome for the Convention for Biological Diversity talks. We need a clear roadmap for the financial markets to know, similar to Paris, to let us know what are the targets, what are the deadlines, and how do we get there. So we're really trying to bring all the tools at our disposal to bear on this problem, from portfolio management, new product development, to stewardship and philanthropy. The stakes could not possibly be higher. Okay. And I'll stop with that.
And Adam, Praj and Elena will kill me for this because this isn't a very scientific question. There's not a process behind it. But Adam, if you look at the top 50 financial firms in the financial services sector, and I'm lumping everything together here, so forgive me, Adam, where are we with those firms? Like, both yourself and Aaron, the fact that you're on this call today, you can both speak to this topic. You're developing products and services, you're upskilling people, you're voting. But where are we with the majority of the financial services ecosystem around this topic? Are people still trying to embrace it? I know there's several hundred people on the call today, so there's obviously a lot of interest in it. Mm-hmm.
Mm-hmm. I would say early days. Okay. It's early days. Look, I mean, if you really look at the financial sector broadly, it's early days on climate. Yeah. It hasn't been very long. We're now seeing statements that are backed by trillions, in assets. I started in the field of responsible investment more than 20 years ago, and we were fighting to get a few $1 billion to say yes. We want to address climate change. We think this is a risk, or we want to address deforestation. We think this is a key risk. We now get statements fairly easily with 4 or 5 trillion behind it. We're now starting to see tens of trillion. So it's perhaps not fast enough, but it's moving quickly. And I will say, when the IPBES report came out back, I guess what was it, 2019? This was the so-called Million Species report. I did not really hear anybody talking about biodiversity. And in the span of about a year, it seemed like everybody was talking about it. We now have a task force for nature-related financial disclosures launched, which with very strong support from the financial sector. We actually helped to co-chair the working group that launched the TNFD. Yeah. So I'm very optimistic, because I am seeing, my peers all of a sudden are talking about biodiversity. It seems to come up in almost every conversation. So yeah. It's late, but hopefully it's in time.
And thank you for that, because I want to just ask Aaron just very briefly as well. I think that's a great comment. When you were saying, Adam, early days on biodiversity, I was kind of thinking to myself, it's also early days on climate. Now, I've been at this for a decade. I had a full head of hair when I started off, and now I've got no hair and 2 children alongside me as well. So it actually has been a long period that I've been working on this, but it really feels in the last 2.5 years, somebody's hit that accelerator button. And then in the last 12 months on the biodiversity. Aaron, are you seeing that as well among clients, among your own colleagues, that we're still in the early days of biodiversity, but we're still there in climate as well, right?
Well, absolutely. But again, I think Adam said it very, very well. There's a huge amount of momentum that has built behind this,
Yeah.
with things like the Net Zero Asset Management and Asset Owners Initiative that have, required companies such as ours to sign up to very ambitious net zero business plans, and they require us to work with our clients and the companies that we invest in for everything climate. And then if you move it, you move very quickly over to biodiversity, because as we've been saying, you can't solve the climate crisis simply through fossil fuels alone.
Yes.
But maybe just one other point to add to Adam's, which is that I think while the goodwill is tremendous, the frustration is the lack of information.
Yeah.
And I think one of the most important initiatives, and Adam, all credit to you for being a part of it, is the TNFD, the Task Force for Nature-Related Financial Disclosures. That is probably one of the most important things that will move the dial for the industry and for investors.
Okay, well, I was on that informal working group on behalf of the UN Convened Sustainable Insurance Forum, and actually, our contribution is going to be the paper that Praj is talking about. But I really get that point. The frustration is the lack of information or data. That's one of the, obviously, the key choke points for everything here. And the TNFD. So Praj, maybe if I can move to you now in terms of biodiversity disclosure and reporting, or nature-related disclosure and reporting, I call it that. What are you kind of seeing from your analysis in terms of what supervisors, regulators, in terms of IDing or disclosure and reporting and management of these risks? And how can we incentivize nature-positive financial flows, given that actually, it's quite diverse what we're seeing now at the moment at a regulatory perspective. So I think, as Adam said earlier on, what Paris gave us was a framework. We're not quite there yet on climate. NGFS is playing a key role, but in biodiversity, we're only starting off, right? So how do we utilize the likes of TNFD, which is only in its startup mode now, right? It's not there yet. So what are your comments about that, please, Praj?
Sure. So I was thinking about it when Adam was talking about we're in the early days of biodiversity, right? So I think the first step for the supervisors and regulators to be effective on supervising nature-related risk is to become educated themselves. And this can be done through engaging with industry leaders like BNP Paribas, academics, and their peers in different financial sectors. And in order to fulfill this task, supervisors need to understand how domestically regulated firms are thinking about nature-related issues, because at the end of the day, it's the regulated entities that are taking action because they are the market participants. For example, when climate change-related discourse was at an early stage, at least in the insurance sector, the supervisors conducted initial surveys that helped both engagement in the issue as well as supervisory understanding of how domestic firms thought about the issues. So I think similar work on nature-related issues at the domestic level is necessary. And when you talk about disclosure, it's again, we are very at the early stage, right? And TNFD is leading a lot of work on this. I think disclosure comes only after the guidelines and metrics are ready, because what you disclose is dependent on what the guidelines are in terms of disclosure, right? So the disclosure and reporting of risk, along with other data sets, is very important part of sound decision making by both supervisors and the financial community, and it's conducive to market efficiency, right? And the supervisors, I think, may consider encouraging regulated entities to, at this stage, at least voluntarily start disclosing nature-related risk in incremental steps and based on aligned and common practices, bearing in mind the limitations on data availability from regulated entities. So, since there is no universal disclosure guideline, I think it's important to follow some of the best practices in the market. And in this regard, supervisors can also consider how to contribute or leverage on the work of the International Financial Reporting Standards Foundation, right? So, which will establish an international sustainability standards board to improve the global consistency, comparability and reliability of sustainability reporting. And I think this is very important initiative, and the standards I think are going to include industry specific guidance as well. And Stephen, you asked a very good question on how how regulatory changes could support maybe removal of nature negative investments and incentivize positive investments, right? And I think I would take a very cautionary approach here. I think it is too early to already proceed with policy and regulatory changes when it comes to nature and biodiversity related risk, because like I said earlier, the regulators and supervisors should first gain an understanding of this risk and assess the financial materiality of this risk. I know, we are talking about these risks are huge, but we have already faced a huge loss of biodiversity and so on and so forth. But it needs to be brought down to how it's linked to the financial sector, and are we already seeing financially material loss on these financial institutions, right? So that is very important. But encouraging to voluntarily disclose and report on nature-related risk and taking a precautionary policy approach is definitely one thing, but without assessing this sort of materiality, the regulators and financial supervisors might be sort of stepping out of the regulatory and supervisory remit. And as of today, I think guidelines and tools should be promoted by the regulators and supervisors to build a strong base of reliable decision useful data to quantify the negative impacts of nature loss on financial institutions. I think that's the first step we should be proceeding with, at least from the supervisory and regulatory side. Over to you, Stephen.
Thanks, President. That's a very important statement. And again, as you said, building capacity, developing tools. Elena, I saw you writing furiously, so I hope you're writing an answer about what we're talking about. But what are your thoughts on what was a very broad question I just threw out there, please? And what are you seeing in your work, please?
Yeah, so when it comes to incentives, this is something that we are exploring, and I completely agree with what Praj said, that it is early to talk about taking real policy action to build these incentives and encourage nature positive investing, because we don't know yet. We don't have clear understanding of what this might lead to. For instance, it could lead to greenwashing, and that's a paper that we have commissioned one of our Inspire members to look at for our final report. So more on that in 6 months. But certainly with regards to incorporating biodiversity into central bank and supervisory actions, I agree with Praj completely that we need to understand what the impacts and dependencies are, because it's not just companies that depend on nature that face risks, but financial institutions that lend to these companies are also exacerbating the problem. And another thing is that it is important to consider that geographical and policy differences across various jurisdictions that we cover, from Europe to Latin America and Asia. There are differences there, and it's important to understand biodiversity risks to the financial system and what is the leading cause of biodiversity loss, so that we can assess which sectors are most at risk. And it will be different everywhere. In some cases, climate change could be the main driver for biodiversity loss, which could make it even more crucial to understand this biodiversity climate change nexus. And understanding this will help financial regulators better understand how to address those risks. And it may or may not be in the mandates of central banks and financial supervisors to incentivize nature positive investing. But as you know, central banks are also purchasers of assets. With regards to climate change, former colleagues of mine at LSE did incredible research to show the extent to which the Bank of England's quantitative easing program had a carbon intent too. So they had to really work on this to remove this, or to address this carbon bias. And this isn't yet explored in terms of biodiversity loss, but as asset purchasers, central banks play an important role in terms of being mindful of assets that they purchase and what signals they give to the financial sector participants. So that's just my notes.
No, thank you, Elena. I really appreciate that. So I'm going to move to a lighter note as well here. I'm going to go back to Erin on opportunities. And sorry, Erin, I had to stop you earlier on because I want this lighter note. I want us to be able to look out and say, actually, there are opportunities here. And I know, we mentioned the WEF figure there, $10.1 trillion US in annual business value. and create 395 million jobs by 2030. And I moderated another panel last week on biodiversity, which Elena was also on. So we're seeing a lot of each other in the last few days, where in the Asian Pacific region, it was kind of payback 1.3 trillion, 4.2 trillion payback, 230 million jobs. So this isn't a trade-off. There's a lot happening here. So, Erin, can you kind of bring it back to the opportunity space and maybe give us a little bit of unpack what you meant by that, please?
Well, I think, there are definitely a lot of challenges with investing in nature. One of them being the fact that many of, or in lots of different parts of the world, farming and land-based investments are in small holdings. And so it's not always easy to access, and it's certainly not easy to standardize. But that is the challenge for us. And so, and again, as we've been talking about, and I think Dasgupta had a quote, didn't he, that said that the problem of biodiversity is essentially an asset management problem. So our job is to put together products and investment solutions that provide access to these nature positive projects and businesses, and bring them to our investor base. So that's the business opportunity. I talked earlier about the stacked returns, but also what you see with many of these projects are that there are numerous ecological benefits associated with many of them. So, example of a project is a farming project that we're looking at in Southern Europe that takes a highly inefficient irrigated corn and pasture farm to a high-value, sustainable almond orchard. And out of that project, you get improved land use with less pressure on the environment. You get a better habitat, better water efficiency. You even get reduced second-order transport emissions by keeping the placement of product closer to the European consumer market. So there's huge opportunity if you go looking for it, both from an investment perspective, but also from an ecological perspective. And I think as an industry, again, our job is to work on creating the products and solutions so that we can do that more rapidly.
And Erin, because that's a fascinating, kind of example. When you look at your book now, and I'm unsure of the value of your book, what you manage, what percentage of that is related to biodiversity investments, like what you just said there, please?
Very little, very little.
Okay.
I think that, you've got, in certain parts of the world, you have, particularly I would say in the Nordics and in the US, there are significant investments into timber, for example. But again, because as we were describing earlier, the investment into agriculture, I think, has been much smaller due to the nature of the business model.
Okay.
And so there's huge opportunity.
Okay, so you're spying that. And Adam, again, I'm not trying to put you guys in the spot, but when you look at your book, in terms, because I was on a panel recently, I was listening on a panel recently, when your colleagues are there, you guys, similar, you're doing a lot of stuff as well in this space, but is it, again, as you say, just at the beginning, it's just kind of starting, or you kind of alluded you've been doing this for a while, actually?
Yeah, and I'm not going to put a number. I don't have a number to give you of what percentage. I mean, but let me reinforce, a couple of ideas that I think we've kind of gone over before, but didn't really say. There's a tremendous quote from the Dasgupta review on the economics of biodiversity, which is that the human economy is embedded in the biosphere, and I think it's really important to keep that idea in front of us, because what we're talking about is everything. And it's sort of hard to get your head around that. But I sort of think about it in terms of guardrails. Yeah. If you're driving down the highway, we have broken through the fence and are racing off into the field, towards a cliff. The question is not, should we make the guardrail an investable asset? The question is, how do we get back onto the highway? And so when we talk about, nature as an investable asset, I agree with what's been said, but we just need to be careful about thinking about preserving these things as guardrails, because we need them. We need them. The other thing I wanted to kind of stress is there's another great quote from I.P. Best from the Million Species Report that says the diversity of nature maintains humanity's ability to choose alternatives in the face of an uncertain future. In other words, we're losing our ability to make decisions about our future. We're losing our ability to manage risk. I don't think we've ever really had to confront something like that before, and I'm not sure that the financial sector has the tools to really think about that, but that's how critical getting this right is. It's been said before that we're faced with significant data gaps. You could look at the data gaps as sort of a map of the financial sector's blind spots.
Yeah.
The data that's generally available from companies is about profit and loss to individual companies. What we're missing is the impacts to nature, the true costs of those profits. Now, many investors have been asking for this information for decades, and there is a lot of good voluntary reporting. And I would encourage companies that are listening to this discussion, don't wait for TNFD to be ready. I also think that TNFD is an incredibly important initiative, and hopefully it's going to get it right. But there are good reporting formats now that you can use. And if you receive, for example, the CDP Forest Survey, respond to it. Because we took a look at our assets. We took a look at those sectors that we think are particularly exposed or creating deforestation risk. And it was very depressing. A significant percentage are providing us with virtually no information at all. And a very high percentage that do have policies to address deforestation have very weak policies. So we kind of know what we want, but we're not getting it. And we're not getting it because it's voluntary information or because those companies just simply haven't prioritized it. So there are things that can be done before we get to TNFD.
Okay. I think, Adam, that's just an incredible comment, losing our ability to manage risk. Just very stark and frightening perspective. Then financial sector,
it is scary.
Blind spots. And we're not trying to scare anybody here, right? I think this is about, the risk management, and as Aaron said, the opportunities. Like we have to feel that as society we can get on top of this, and we are getting on top of this. But the panel I was moderating earlier on as the chief executive of Ireland's largest bank, and he kind of said, what, do we actually have until 2030 to get this right? We don't, we're talking about 2030, but we don't actually have that time frame. So I'm just coming back to time frames here now. I'm just conscious of the clock is ticking away. So I'm just going to ask, the same question of every panel member is, if we were to come back here now in a year's time, and Adam, I'll start with you because you just finished there, but given the urgency that you've really inserted into this, what do we need to see happen within the next 2-3 years? Or if you want to make it a smaller time frame of 12 months. If I'm an asset manager, so I'm not going to say it the word, but I'm an asset manager, I'm listening today. What should I be doing if I'm only beginning this journey now over the next 3 to 12 months to really get on top of it, please? Or at least start.
Yeah, sure. Well, first, you do need to take a look at your assets. You need to try to understand what your exposure is to nature loss. If you're a broadly global, diversified asset manager, there's going to be a lot of exposure. There's no question. You're going to essentially come up with the same results that we did, or that DNB did, or that anybody else that took a look at it did. You're going to see that it's very significant. So what you need is a real plan of action, a meaningful plan of action to address that. And I think it's got to. Take a look at our report. Hopefully it's instructive. You have to look at all the tools that you have in your toolbox to try to move things in the right direction, and you have to be proactive about it. You can't simply look at this as a problem that's coming up ahead that you might be able to hedge against. It's a systemic risk. We can only hedge against small pieces of it. We cannot hedge against the whole thing. So we need to work together towards a common solution, and we need to be clear about what our timeline is and what our targets are. So within 2 years, I would love to see all of all the largest financial institutions publish a clear plan for how they're addressing biodiversity loss, how they're going to get this reversed by 2030.
Thank you, Adam. Elena, if I could just maybe spin across to you from the regulatory side, recognizing that a regulatory in the regulatory space, but in terms of what you're seeing in research, what do you feel now we need to see over the next 12, 18 months, please?
Yeah, I think just to bring it back to be relevant to the asset managers, I think that asset managers and financial firms need to understand that policy change could come quickly, And you don't want to be caught in that wave of transition risks if, say, your central bank or your financial supervisor decides that mandatory disclosures are going to be the way forward. Because as Adam said, or even Stephen said, we don't have until 2030 to address to start addressing biodiversity loss or climate change. So if central banks are starting to build capacity within their institutions, then things could change very quickly. And I agree with what Adam said, that you need to understand where your exposures lie, and make sure that you have plans in place to move forward if policies change. This is just this will happen, and you don't want to be without a plan when it does. And if financial regulators are starting to pick up on this topic, and they are, and they start to see biodiversity related risks as material, it really could lead to bigger problems if you have a huge holding in, say, not just coal for climate, but things like forestry that isn't sustainable, or cattle, or anything of the like. So as a financial firm, take the step to understand where your exposures lie. Don't wait for policy to move. Find ways to do your reporting now. There are already tools available.
Brilliant. Praj, you know, from your perspective, and obviously you were focused on the insurance side, but the insurance sector is, I think, the second largest asset manager, if I got that term right. What are you seeing now within this? What do you think, given, and you and I discussed this before, it took a period of time to get here for climate regulatory action, right? But I think Elaine is saying there it's going to be a shorter time frame because of the understanding, building out the capacity. What is your perspective, please?
I think given how expeditiously this discussion is going on with regards to biodiversity loss and how financial institutions should be considering it, I certainly envision at least some of the proactive regulators and supervisors considering to develop guidelines for risk management tools, such as forward-looking metrics and indicators to quantify dependencies, risk, and impacts, and which in turn will help them factor in variables in assessing whether addressing these risks should be part of the fiduciary duty of the financial institutions, right? So I think this is definitely coming. It's just a matter of time when, right? So and I think one other point I see is, and which I think will definitely happen, is several industry leaders like BNP Paribas, which has already started mainstreaming nature positive investing into their investment decision making. I envision joint workshops between supervisors and industry executives, and learning from like what's broadly happening, right, and how that could be applied within the regulated entities of those supervisory jurisdictions, right? So that I definitely foresee. I think so. In short, I think two main things will happen in the next 2 years. The first is increasingly capacity building activities within the regulatory side, also bringing on board the market side. And the second is better tools and better guidelines on risk management, and particularly in the forward-looking risk management side.
Great, thank you, Praj. Erin, we're going to finish up with you. Same question, please.
Same question. A couple of things. One is we're all talking about the data, and we're all agreeing that we can't wait for perfection. And so I think that asset managers need to build more capacity around biodiversity research, more fundamental capacity. The complexities of the nature risk are immense. And if you think about the climate crisis and the risk involved there, in that case, we're talking about gases that we know how to measure. In the case of nature, these are much more complex systems, I think you could argue, and the risks are only beginning to be, cataloged. So we need much more of our research capacity going towards the subject of nature and biodiversity. And then just one other point, which is I think that we have a role to play in creating demand. And so we need to work together as an industry and with companies, but we also need to work with our clients and talk to them about the exposure, the biodiversity exposures in their portfolios, talk to them about new solutions and products as they become available.
Brilliant. Thank you very much for that, Erin. So I'll just try and wrap that up if I can, guys. You know, what I'm seeing there in terms of that question, key point, Elena, policy change can come quickly. I think, Adam, to your point, don't be hanging around waiting for it, get on top of it. I think it's a really good point when you look what Erin just said there. How do we put more research capacity to this topic? I think it aligns then with what Praj was saying. We're going to see more tools, better tools and guidelines from the regulators, a bit more forward-looking. So we're going to see that come out. And they'll be increasing their capacity development activities within, which I think, Erin, then as well, along with the research, it's actually building up the teams within your own staff, or not actually building up the teams, it's layering on top of your existing teams this type of expertise. And I suppose the challenge right now in the marketplace around talent programs, there's probably not a lot around biodiversity finance. Sometimes it's hard in the climate space in general. I think, Adam, then, you know, the clear plan within 2 years, kind of understand where your exposures lie now, and then, look out to 2 years and say, how can we actually develop a plan within that? But that keeps, as you said, Erin, it comes back to data, it comes back to capacity building. So my key takeaway is that policy change is going to come quickly. And I don't think it's policy change may come quickly. I think it is going to come quickly. I think what we're seeing from both what Elena and Praj are doing and what others are doing, and there's a lot of research going into this from the regulatory and supervisory perspective. And as Praj said, they're getting on top of it. And then we can see from leading firms such as HSBC and BNP Paribas what you guys are both doing in this space. So from if you're an asset manager, I think the mantra to take away today, policy change can come quickly. You need to build capacity up internally to be able to deal with that from a research perspective, from a disclosure perspective, understand your exposure and develop a plan. And don't wait, even though I agree with you, Adam, TNFD is absolutely fantastic. And I think what's fantastic about it is the grouping that came together to actually develop it. I just thought, just screamed, this is important, and you'd public policy, you'd regulators, everybody was involved. And so really a common good, but it's going to take a while to set it up with the best will in the world. And as you said, we don't have that time, so let's get going now. So look, if I may, I just want to thank you all. We've just literally come to the end of the hour. I want to thank you, Praj in DC, Adam in Brooklyn, Erin in London, but from the States, but thank you very much. And then Elena obviously moved from Kuala Lumpur to London, a truly international event today. So thank you very much. And hopefully this time next year, if we're doing Climate Finance Week again, we're going to be talking about this agenda in a much more positive way. And as you said, policy change and regulatory change will have come. So thank you to our panel, and thank you very much for tuning in.